Welcome back. And before we went into a break, we were discussing the rise in milk prices. I am now joined by Mr. Jayen Mehta. He's Managing Director, Amul, to discuss this further. Thank you so much for joining us, Mr. Mehta. And what is your sense on about the milk prices, which we have seen gone higher? What's your sense on the markets going forward? What is the kind of price rise that you're expecting from here on?
This is a matter which concerns both the producers and consumers. So it's definitely a tightrope walking for all the brands associated with the dairy industry, particularly the cooperatives like us who are owned by the farmers, and they also have huge expectations. And we have this need to pass on some of their burden to the consumers. Having said that, we have to look at things in perspective. Our flagship brand is Amul Taza Toned Milk. And in the last 4 years, we have increased the price only 6 times. So an average about 6%, which is more or less in line with the inflation. So by and large, the milk price increases are not as high as our producers would like it to be. But then it's a reality, and partly one can say that inflation to consumer is income to the producers. Having said that, the producers depend on the consumers for the market, and they are also equally concerned as the rest of the industry that if we increase our productivity, if we work on reducing the cost of production, the producer will also be happy and the consumer will also be happy. Having said that, the last year has been bad for the dairy industry, not just in India, but around the world. So if India did not register the regular growth in milk production in the financial year 22-23, the same situation applies in different parts of the world also. New Zealand also had a dip of about 1.2 to 1.5%. Western Europe also, on the whole, had declined. Eastern Europe also had declined. Australia declined by about 4 to 5%. So all the major dairy producing countries in the world did not see any growth. The demand also, in a way, was a bit depressed because the single largest player internationally, China, is a large importer, had also cut down its demand because of their COVID restrictions and so on. So as a result of which, the milk producers around the world had suffered, and India, fortunately, because of the strong domestic market and the strong domestic economy that we have, we managed to not only sell, but we are now on a growth path.
All right.
March
but
procurement of Amul was about 3% more than previous March. April will be 6 to 8% more, and the coming year seems to be very, very positive for us.
Mr. Mehta, I also want to know about, while we have seen hike in prices, what has been the global trade like? Because we've seen New Zealand, China cut prices.
See, milk is a very, very highly domestic market globally because only about 6 to 8% of the total milk produced globally is traded. So it's a local market, and except for the few countries which are highly dependent on exports, most of the countries and economies manage their domestic equilibrium with the domestic consumption, which is India is a classic case. As the largest producer of milk in the world, almost 25% of the total milk in the world is produced here. We are not import or export dependent.
Mr. Mehta, also, we do realize that milk is a small margin business. How has your margins been, and how do you look at the margin as a game going forward? Because a lot of foreign players, private players also seem to be adding in.
See, any new player in the market is welcome, because as long as you buy milk from our Indian farmers anywhere from India, it's good for the industry. And as I mentioned, more milk coming into the organized sector means farmers have a more safety and security of in the long term. The nature of the industry is such that the volumes are very high. And obviously, if the market is growing at a rate at which we are, the prices cannot be as high as the private players would want to be. So naturally, you have to deal with very low EBITDA margins. But then one has to play this game in the long haul. Amul obviously is a strong player here, and Amul, and along with all cooperatives together, we pass on more than 80% share of the consumer's rupee back to the producer. Now, a foreign player does not understand this. I mean, they are used to more than 30% margins because they pass on only 1/3 share of the consumer's dollar or a euro or a pound back to their producers. So it's a very, very different scenario for them. Obviously, in every market, you have to deal with the local competition first. And we are obviously not sparing any effort to strengthen our positions in the markets for each of the product categories that we operate. But then if foreign players believe in building the domestic market, working with the domestic farmers, there is enough opportunity for everyone to grow this market. Because let's accept it, only 1/4 of the milk in India comes to the organized sector. And that is going to double in the next 10 years. So more room for everyone in this.
All right, that is good to know. But I also want to understand on what categories do you think will do well going forward? Because we've seen milk volumes grow, cheese, chas, beverages. You are coming in various categories into organic and bakery as well. But what is your sense on where have we seen the growth in last year and anticipation of this year?
As I mentioned earlier, there's a huge tailwind for every single product category. The fresh milk business has grown by more than 20%. The fresh products been doing very well. Product like curd has shown more than 40% growth. And same is the case with ice cream. Same is the case with beverages. I mean, 25, 30, 40% growth. It has been a reality, and we expect double-digit growth in every single product category that we operate, be it Tetra Pak milk, or be it cheese, or table butter, or ghee, and the dairy. The mithai range will grow at a much phenomenal rate because the base is quite small. But yes, there's a huge growth we are seeing. Now, growth comes in two ways: A, increased consumption, and also increased efforts in distribution. So the kind of efforts in building distribution in our country that we have been doing, focusing on the top 200, 400 towns to reaching up to 5,000 towns and villages with population of 5 to 10,000. So, and adding more offices, adding more distributors, directly servicing most of the outlets. So it's an all-round effort. I mean, you increase the manufacturing capabilities, you increase the supply chain capabilities, you strengthen the brand to increase the consumption of the products, take market share from the competitors, and try to grow the business. So while we've grown at about 20% last year on the previous year, we want to continue on the same path in this year and the years to come. And the foundation is pretty strong to build this entire structure.
All right, a double-digit growth in last year and this year as well. And I hang on to the fact that you said that ice cream demand raised up by 40% last year and is expected 20% higher this year as well. But I also want to push in some more commodities here. You're dealing with them. Look at sugar prices, 11-year highs, cocoa prices, 28-month highs. Coffee prices have continued to surge as well. And ditto is the case with various other commodities as well. And you consume all of them. How are you dealing with various commodity inflation?
Yes, which is, you're right in a way. But since our largest exposure is to milk, that's the most important factor which into this. Cocoa bean, we are sourcing from Camco, a cooperative from Karnataka in South India. And they are quite good into supplying the best quality cocoa beans. We do have international sources of cocoa beans also. And that's what we are also dealing with it. Coffee, yes, but again, our largest supplies come from the domestic manufacturers and processors of coffee. So that's also quite okay and taken care of. So by and large, we are quite okay into how we are able to take care of this. And we are doubling up our capacities for chocolates. And our new range of coffee is also coming up in the market. And all these, dairy, sugar, coffee, and cocoa, and the vegetable oil is very little in our case, practically zero. So that way, oil is not a major factor for us. Though we have come in edible oil brand within Janmay brand shortly, but there we are following a very different strategy. We launched the first time in India a fixed price point pack, 100 rupees oil in cottonseed in Gujarat last month. We are launching mustard, the Kachigani mustard oil in Guwahati this week. And consumers will get oil at a fixed price of 100 rupees. The volume of oil may vary depending on the increase or decrease in price. So that's how it's. I mean, it's an initial launch. I mean, too early to talk about it. But yes, it's getting very good feedback, and we'll be launching it in different markets as well.
All right, that's thinking quite out of the box. I mean, you've excelled in what you do in dairy, and as you said, 100 rupees a pack for edible oil. The volume may go up and down. But the statement that stays with me, Mr. Mehta, as you said, is inflation to consumer is the income for farmer. And we do understand that. And as you said, the milk prices have seen maximum gains. Going forward from here is going to be slightly more and then consolidation. Thank you so much for joining us today. And with that, it's a wrap on this edition of Commodity Champions. Thank you for watching.